I'm just looking at how you're rating some of these Mag 7 stocks. It's all buys. Microsoft a strong buy. What you heard from the Fed yesterday, does that change your outlook or price targets on any of these stocks?
It doesn't change our outlook or the price outlook on these stocks. What I would say is, you're going to have a less generous Fed here going into 2025. There's going to be more moving parts. I think it limits the potential for further multiple expansion from these levels. So it makes things a little bit more difficult. I think you have to temper your expectations a little bit for gains, or at least the magnitude of gains here for a number of these big tech stocks. I think you also have to watch a number of factors and what the impact is going to be from kind of, this change in the interest rate landscape. For instance, what happens to the dollar here over the next couple of months. And really the X factor kind of going into 2025 is going to be Trump and what he does on the policy side of things. But looking kind of just, at things in a vacuum right here, we wouldn't necessarily change kind of our outlook on any of these names.
Okay, so not significantly change your outlook, but you mentioned something that's important. Todd Gordon told us just a few minutes ago it's not as important, but the rise of the dollar certainly is going to hit the earnings outlooks of a number of these companies. Microsoft, in fact, 2 years ago when we saw the strong dollar, one of the headline companies that really warned. When you look at Meta, the fact that interest rates are higher, that could impact a lot of their business, especially when it comes to small business advertisers. In your mind, which one of these Mag 7 stocks is more likely to be harder hit than the other ones? Which one do you think is going to do better?
Yeah, and I also make this other point here. When you kind of look at rotations within the market as well, I'd say kind of big tech, fundamentally is better positioned to kind of handle, swings within kind of, from interest rates out there, just kind of given what their business models are.
They've been a safety trade, Angelo. So we've seen that before.
Right, exactly.
But when we're looking at these stocks more individually, which ones do you see doing the best with the idea that we're going from 4 cuts down to 2? Which one's hardest hit?
Yeah, I mean, listen, I actually think the two names that are set up the best going into 2025 are NVIDIA and Microsoft. I think the one that might be a little bit kind of more daunting, or the one I'd kind of be a little bit more selective with, is Apple at this point in time, just given the multiple expansion you've seen on their side of things, given the fact that it is a hardware company and they are going to have to deal with kind of, potentially a stronger dollar here, as well. But, right now, kind of going into 2025, we actually like Microsoft and we like the NVIDIA setup a lot, especially with the relative underperformance that you've seen in both names here in the second half of this year. NVIDIA's got a number of catalysts going into 2025. Okay. Of course, you've got CES and kind of GTC that we think is going to help that stock.
Angelo,
from
one last question before we let you go.
Yeah.
The idea, again, going from 4 cuts down to 2 cuts, does that change the CapEx outlook in your mind when it comes to the AI spend? We've also heard Satya Nadella saying, they feel like they have enough chips right now. We've seen some other companies produce their own chips. When it comes to CapEx spend, the idea of the higher cost of capital and everything else, does that change that outlook in any significant way?
Not for big tech. And the biggest reason for that is, the free cash flow that they're generating and kind of the opportunity tied to AI here over the next kind of 3 to 5 years is going to force these companies to continue to aggressively spend. As long as kind of the cloud and the digital ad spend outlook remains intact, and we think it will largely remain intact, I think kind of the CapEx outlook remains somewhat favorable here over the next 12 months.